So do you think the down payment is all you need to buy a house? Surprise, closing costs could add thousands more to your home purchase. And if you're not ready for them, it can wreck your home buying plans. In this video, I'm breaking down exactly what closing costs are, what's included, and how to prepare for them so there are no financial curveballs on closing day. So let's get started. First off, this is one of the biggest questions I get. What are closing costs? Generally speaking, closing costs are one-time fees that are due when you officially take ownership of the home. They basically cover services that help finalize your home purchase. These are things like your loan setup, the property title transfer, prepaid property taxes, and more. Most buyers pay between 2% and 5% of the home's purchase price in closing costs, but for home buyers in Utah, closing costs tend to be more around the 3% mark on average. So, for example, on a $450 home in Davis County, that could be in the range of $9,000 to $22,000. Now, I know this sounds like a crazy amount for most people to pay up front, but with the right help, there are ways to cut these costs back or even eliminate most of these costs altogether. The next question I get is, what is specifically included in the closing costs of a home purchase? So let's break that down. Closing costs usually include a loan origination fee, and this is what your lender charges you to process your mortgage. An appraisal fee. This is a fee that is charged to you, and it covers the cost to get an official appraisal completed. The appraisal confirms the home's value for your lender. There's also a home inspection fee. This is the fee charged to get the home inspected and ensures there are no hidden issues. A home inspection is optional, but I highly recommend it. There's the cost of title insurance and the cost of having the property title searched for any potential title issues. The title search will confirm if the property's title is clean or not, and title insurance will protect you as well as your lender against any future undiscovered title claims or future title issues. In addition to these fees, there are a few more to highlight. The next one is what is called an escrow fee. This is the fee paid to the escrow company managing your closing transaction. They ensure that all paperwork is signed correctly, purchase agreements are finalized, funds are transferred, and everything gets recorded with the county that your home is in. The next set of fees are what we categorize as prepaid costs. Now, the concept of having prepaid charges is a little confusing for most home buyers, but the word prepaid just means you're paying for something in advance before you actually need to pay for it. These prepaid fees include property taxes, homeowners insurance, and mortgage interest. When it comes to prepaid property taxes, think of it like this. When you get a loan to purchase your house, the lender wants to make certain that property taxes always get paid. Along the Wasatch Range in the state of Utah, for example, property taxes are typically due on November 30th for the calendar year, even though the year hasn't ended yet. This creates a little bit of an issue for payment since the full taxed amount for the year hasn't been entirely collected yet. So to solve this issue, when you purchase your home, you will prepay a portion of your property taxes up front that are for the remainder of the year in advance, okay? Your escrow account that holds these funds will also be credited by the seller for the time that they own the property as well. This will ensure that when your property tax is due for payment, the full amount will be paid on time and for the full amount. So the seller will contribute as well as you will to ensure that the taxes will be for the full amount to be paid. Now, the next prepaid cost is homeowners insurance. Similar to how car insurance is paid for the time period going forward, your homeowner's insurance premium is paid up front to ensure that there is insurance coverage for the next 12 months. And then the last prepaid cost is mortgage insurance. Let's say that you close on the sale of your home on the 20th of the month, for example, but mortgage payments aren't due until the 1st of the month. Typically, lenders will ask for prepayment of the interest that will accrue when you go to close on your home and before your first payment is made. In some cases, lenders may give you more than a month to make your first payment. So prepaid interest paid may be more than the accrual of just a few days. And that covers the prepaid costs in general. Now, next up is the credit report fee. This is one It's a simple, straightforward description. The fee is charged by your lender for pulling your credit report. Now, if your home is in a homeowners association or an HOA, this brings us to the last potential closing cost, that is an HOA transfer fee. While this isn't something that is charged by all HOAs, most associations have adopted charging one for this, and it can vary. This charge is assessed to cover the administrative fees for transferring the HOA account from the seller to you. And the amount varies if it's charged at all, and it will be disclosed before closing, as will all of these other costs, so that you're able to plan for these ahead of time. I know this is an extensive list when it comes to closing costs, but now you hopefully have a better idea of why these costs add up and the reasons behind them. The next question I usually get is, who pays for what? In Utah, buyers typically pay most of their own closing costs, if not all of them, but some are negotiable. For example, sellers have their own closing costs in Utah. However, in a buyer's market, some sellers may be willing to help pay for some of your closing costs. So depending on the situation, you may be able to ask for a seller credit. Now, if you're concerned about coming up with the money to cover closing costs and a seller isn't willing or able to help you cover some of those costs, there is another alternative to consider, and that is the possibility of other funding programs and grants that you could be eligible for. Consider looking into, for example, the Utah Housing Program for first-time home buyers, as well as potential grants or loan programs offered by a variety of cities throughout Utah, and they're available not everywhere, but in select areas. These options can open up other home buying opportunities as well as make the process more affordable. This is all, I know in general, this is a lot of information, and I hope that you have found it to be useful as you consider your individual situation. Overall, when you're considering closing costs, a good rule of thumb is to plan on them being around 3% of the purchase price. But keep in mind as well, your lender will also provide what is called a loan estimate early in the process that will detail and outline your expected closing costs. So review this closely and ask questions if anything is unclear. Well, that's everything you need to know about closing costs. Now, you can move forward with confidence, knowing exactly what to expect before the house keys are ever handed over to you.